Is El Salvador facing the biggest economic challenge in its recent history? In 2025, the country is struggling with a slowdown that touches almost every part of daily life. From falling jobs to rising prices, the pain is real for families and businesses alike. The government's decisions, especially on spending in Bitcoin, have made headlines around the world. But what is really driving this crisis? And can El Salvador find a way out before things get worse? These questions are on everyone's mind as the country watches its economy slow down. The stakes are high and the answers are not simple. Every indicator points to a nation in need of urgent action. In this essay, we will break down the facts, explain the problems, and look at the choices El Salvador faces now. The story is about more than numbers. It's about the future of a country and the lives of its people. Let's take a closer look at what's really happening and why it matters so much. The first and perhaps most telling warning sign is the drop in GDP growth. GDP, or gross domestic product, is a crucial measure of how much the country produces in goods and services. In 2024, economic growth slowed sharply, a concerning trend. This means El Salvador's economy is barely moving forward, indicating stagnation. When GDP stalls, it directly hurts jobs, reduces incomes, and diminishes hope for a better life for many. Unemployment is rising too, adding to the economic strain. With fewer jobs available in the market, more and more people are finding themselves out of work. Families feel the pressure mounting as breadwinners struggle to find steady pay and consistent employment. This unfortunate situation leads to growing worries and anxieties about how to pay for essential food items, rent, and increasingly expensive school fees. Inflation is yet another big problem that the country is facing. Prices for basics, like food and fuel, have jumped significantly. This makes it increasingly harder for everyone, especially low-income families, to afford the things they need to survive. Inflation relentlessly eats away at savings and incomes, disproportionately affecting the poorest segments of society. Interest rates are also up, making borrowing more expensive. Borrowing money costs more now, so fewer people and businesses can afford to take out loans for investments or operations. Finally, and critically, public debt is rising at an alarming rate. The government owes more money than ever, making it harder to allocate sufficient funds to essential services like health or education, impacting the future generations. All these interconnected signs paint a concerning picture, showing a country facing real and significant economic trouble. Let's take a closer look at the numbers and what they truly reveal. In 2023, El Salvador's GDP experienced growth, increasing by about 2.6%. But in 2024, that growth unfortunately fell below 1%, a noticeable decline. This is indeed a sharp slowdown, indicating potential challenges ahead. For a country that urgently needs to grow at a faster pace to effectively reduce poverty, this significant drop in growth is a big worry and cause for concern. Unemployment also rose, climbing from 6.5% in 2023 to over 8% in 2024, reflecting a troubling trend. That sadly means thousands more people are now without work and facing uncertainty. For young people and women in particular, finding stable and secure jobs is proving to be even harder than before. The lack of sufficient job opportunities makes daily life a constant struggle for many families across the nation. Furthermore, inflation climbed above 7% in 2024, adding to the economic strain. The cost of essential items like bread, beans, and cooking oil all unfortunately went up, impacting household budgets significantly. As a result, many families have had to make difficult choices, cutting back on meals or being forced to stop buying other basic and essential items altogether. Even those who are employed with jobs are feeling increasingly poorer, as their hard-earned money simply buys less than it used to. Adding to these woes, public debt is now alarmingly over 85% of the country's total GDP, a substantial burden on the economy. This is undeniably a dangerous level, posing significant risks. It sadly means the government is now compelled to spend more of its resources on paying back existing loans, which directly impacts the availability of essential services for the people. Compounding the problems, interest rates have also jumped considerably, making it significantly harder for businesses to invest, grow, or even simply expand their operations. Taken together, these numbers paint a concerning picture, revealing a country grappling with very real and significant economic distress. Many interconnected factors are contributing to El Salvador's economic slowdown, creating a complex web of challenges. One significant aspect is government spending. The government has actively tried to stimulate the economy by increasing its spending initiatives. However, a considerable portion of this money has been allocated to large-scale infrastructure projects. A significant amount is also being used to service existing debts. This leaves less available funding for essential public services like schools and hospitals. Consequently, many people are feeling the economic pinch in their daily lives. Another noteworthy decision was the adoption of Bitcoin as legal tender back in 2021. The government's intention was that this move would attract foreign investment into the country and also facilitate easier and cheaper remittances for the population. However, Bitcoin's inherent value is known to be quite unstable and volatile. When cryptocurrency prices experienced a significant drop in 2024, a considerable number of people suffered financial losses. Many businesses remain hesitant about integrating Bitcoin into their daily transactions. Remittances, the money that is sent home by Salvadorans working in other countries, represent a crucial lifeline for countless families across the nation. In 2024, there was a decline in remittances for the first time in several years. This was largely attributed to job losses in the United States and other host countries. With reduced money flowing into the country, both individual families and the overall economy are feeling the strain. Furthermore, broader global economic trends are also exerting their influence. Persistently high energy prices, coupled with sluggish economic growth among major trading partners, are negatively impacting El Salvador's export sector. When taken together, all of these converging factors are making economic recovery significantly more challenging. For many Salvadorans, these problems are not just numbers. They are daily struggles. In 2024, rising prices forced families to cut back on food, medicine, and school supplies. Many small businesses closed because they could not pay higher interest on loans. Farmers faced higher costs for seeds and fuel but could not raise their prices enough to keep up. City workers saw their wages lose value as inflation raced ahead. Young people found it harder than ever to get their first job, leaving some to look for work abroad or turn to informal work. Banks felt the strain too. With more people out of work, more loans went unpaid. Banks became cautious, lending less money to families and businesses. This made it even harder for the economy to grow. The government tried to help with subsidies and new programs, but with rising debt there was less money left to make a real difference. For many, life in El Salvador got tougher in 2024 and 2025. All these problems do not happen alone. They feed into each other, making the crisis worse. When the economy slows, jobs disappear. With fewer jobs, people spend less, so businesses struggle. Businesses cut back or close, which means more people lose work. High inflation makes it harder for families to buy what they need. As people spend less, businesses earn less, leading to layoffs and more unemployment. When unemployment rises, banks worry about loans being repaid, so they lend less. This slows the economy even more. Rising public debt limits what the government can do. With more money spent on debt, there is less for schools, hospitals, or roads. The Bitcoin gamble was supposed to help, but it brought more uncertainty instead. These patterns create a cycle that is hard to break. Without strong action, each problem makes the others worse. The country needs a way out of this downward spiral. El Salvador stands at a crossroads. The signs of crisis are clear. Slower growth, more jobless people, high prices, and growing debt. Government policies like big spending and risky bets on Bitcoin have not delivered the hoped-for results. External shocks like lower remittances and global slowdowns have added to the pain. The problems are linked. Each one makes the others harder to solve. This is why many experts and ordinary Salvadorans are calling for real reform. The country needs careful economic management, not quick fixes or risky experiments. Fixing the crisis will take time, honesty, and tough choices. The government must focus on smart spending, stable policies, and ways to help people and businesses recover. El Salvador's future depends on breaking the cycle of crisis and building a stronger, fairer economy for all. The lesson is clear. Only real change can lead to real hope. El Salvador's best chance is to act now before the crisis gets even harder to solve. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.